Why you can get 15 to 25% return on your money by investing in the stock market right now. Why waiting for the crisis or looking for ideal entry point is the worst investment decision. First of all, increasing interest rates, it usually equals to market growth. It seems paradoxical, but these data are easily verified. Take the previous two major crises in the US, the dot-com crash and the mortgage crisis. Both were preceded by cycles of rising US Fed rates. The Fed began rising rates in the middle of 1999 in an already highly overheated market and completed the rate hikes by May of 2000. After that, the market crashed and we saw the legendary collapse of dot-com bubble. But before the crash, we saw markets continuing to rise. Before the mortgage crisis, there was a similar picture. The Fed raised rates from 2004 to 2006, and only a year after the end of the rate hike cycle, the market collapsed. So the pattern is very simple. The market falls not when the Fed starts rising rates, but when it finishes doing that. We are at the very beginning of rate hike cycle in 2022. And this rate cycle could be prolonged for a year or two. And this means that stocks can go up all this time. The second of all is fear is a precursor of massive profits. Statistically, the higher the fear indexes are, the higher the market returns in the next 12 months. And now we see high levels of pessimism, panic, and so on in the market. The level of put options that allow you to fix the sale of the shares have reached a record level over the last 10 years and even surpassed March 2020 levels. Given the current levels of fear and the volatility index, you can expect up to 25% return in 1 year. And the third point is cooling down of markets is the key to growth. Indeed, stock market crises or crashes occur when markets are overheated and euphoric. Investors buy everything without looking at fundamentals. They believe in success blindly and recklessly. Piquantly, their price to sales ratio dropped by 35, even 70%. The decrease in these coefficients is a good signal for the potential growth of the stocks. Decreased euphoria is also a signal that there will be no stock market crash. Of course, there are no guarantees in the stock market, but what do we see? The first one, the beginning of the cycle of increasing interest rates signals for the potential growth of the stock market. The second of all, maximum fear index, it also signals potential market growth. And the third point, cooling down the euphoria with excellent report of the companies. It indicates the potential market growth. Of course, you can wait for the crash. It will definitely be there 100%. But I would rather believe that we will see a collapse in 3, maybe 4 years rather than in the foreseeable future. I prefer to be in the market and I prefer to buy stocks when everybody else is selling. How you should act, only you can decide. And of course, if you need some help to build your stock portfolio or you would like to learn about investing in a short, intense manner, I will leave all necessary links down this video. And as always, good luck with your investments.